Hello, welcome to the webinar today on making tax digital, specifically for landlords. I am just going to wait a few more minutes before I kick off properly, just to let a few more people arrive. People are still arriving at the moment, so go with this just a minute or two, and then I'll get started properly. The chat is open, so if you have any questions or want to add any thoughts on anything, please do make use of the chat during the webinar today. Just to say again, as a few more people are arriving, I'm just going to wait a minute or so before I get started, just to let any extra people join. Okay, I think that's probably long enough, and we should be getting started. So welcome to the webinar today, all about making tax digital for landlords, specifically sort of who that's going to affect, when, what you need to do, and how you can actually do it. I'm going to talk sort of broad terms about who's going to be captured and when over the time. I will also run through a bit of a practical demo of how you can actually use PaTMa for making tax digital. And I will also talk a bit about how this might work with your accountant, if you have an accountant that's helping you out with your finances, your tax return and things in your property businesses. So that whole thing will take us hopefully in the region of 45 minutes or so, maybe a little more. If you'd like to, or if you have any questions while we're going through, please do put them in the chat. Kat is also here on the call helping me out today, and she'll be keeping an eye on the chat and collecting together any questions. I won't be looking at it sort of as we go, but I'll pause here and there and answer any questions if they come in. So I think that's probably enough time to make sure everyone is joined who's going to join today. The webinar is being recorded, and we will share a video of this in the coming days. So keep an eye on your email if you want to see perhaps a watch back and recap anything that you needed to double check. So let's get started properly then. First of all, who am I and why am I talking to you today? So I am a landlord. I have been for over 20 years, and you can see on the screen that well, a couple of pictures of properties. They're my first property and my most recent property that I purchased in my personal name. And this does mean that I am going to be caught by making tax digital. So I am one of the landlords who are going to have to deal with that. Alongside being a landlord, I've also been making software as my sort of career. And I've been doing that for over 30 years now. And for the last 10 or so of them, depending on quite how you count it, I've been making property related and landlord related software, particularly in the form of PaTMa. And then within that, the last 5 years or so, we have been working with HMRC on making tax digital and having that support be ready for when those requirements start. PaTMa was first recognised by HMRC a few years ago now, and we have people who are actively using it for making their quarterly submissions, their quarterly updates in the testing period at the moment, so in the current tax year. So it is fully recognised and fully working for landlords making property submissions to HMRC every quarter. Who is affected by making tax digital? Well, if you're a landlord and you own property in your personal name, so not in a limited company. Limited companies are outside of making tax digital, at least for the time being. So at the moment, it is landlords with personally owned property. And specifically, it depends on how much your annual rent is. So if you've got annual rent, and this is the actual amount the tenants pay, this is not your profit that you get or the amount you receive after an agent has deducted fees or anything like that. It's the actual raw amount that the tenants pay. And if that is £50,000 or more, then you will need to be doing Making Tax Digital from this April 2026. If your total annual rent is less than £50,000 but more than £30,000, then you will need to be doing it from April next year. If it's less than 30,000 but more than 20,000, then it will be April 2028 you're affected. And I should say that if you also have a sole trader business, then that is also covered by Making Tax Digital. It's what's referred to as qualifying income for making the decision as to whether you're caught by Making Tax Digital or not. And you have to add in your sole trader turnover. So again, it's before any expenses or anything else come off. It's the total receipts, the total turnover for that business. And that's added together with your annual rent. And that's what you then compare to the 20,000, 30,000 or 50,000 in order to decide on which year you're affected. The actual specific requirement depends on the amount that you fill in on your sort of previous tax return. So until you have told HMRC about a certain level of income, 50,000, 30,000, whatever it might be, on a tax return, you're not going to be affected by Making Tax Digital. So if on the tax return you've just submitted, probably in January for the previous April, then if that was over 50,000, then that means that you will be in from April. If, however, on that tax return you submitted a total annual rent and possibly sole trader turnover of less than £50,000, then you don't need to be doing Making Tax Digital from this April. A quick note on joint ownership. So when you're considering whether you're caught by Making Tax Digital or not, caught by the requirements of HMRC, you need to only consider your portion of the rent for jointly owned properties. Obviously, when you're actually working out your tax figures, it's only your portion of expenses and things like that as well. But for deciding whether or not you're in Making Tax Digital, it's just the rental amount. And again, it's just your proportion of it. So if you've got 50-50 property, the rent is divided by 2, and it's only that amount that's allocated to you as an individual that decides whether you, as an individual, must take part in Making Tax Digital or not, and when. Just to add that if you're using PaTMa to help you keep track of your property finances, PaTMa does handle joint ownership in a number of different scenarios. And I'll talk a little bit more about that when we get to the demo part. And it handles the splitting of the income and expenses and things all automatically in order to only submit your own individual figures to HMRC. What do you need to do and when? So this is now having concluded that you are affected by Making Tax Digital. And what you need to do and when in each or in the year that you are affected, or years as it goes forward. So these dates on this slide talk about being affected from April 2026. But of course, if you're not affected until next year, you can just add a year to each of the dates here. So from the April, you need to start keeping digital records. And I will explain in a few moments what a digital record is, but you need to be keeping those from April. And then after the first quarter, so in July, then you need to make your first quarterly submission to HMRC. Another 3 months later, October, you need to make your second quarterly submission to HMRC, January, your third, and then the following April again, your fourth quarterly submission to HMRC. And these quarterly submissions contain just the property figures. I'll go into a little bit more depth about what they actually include later on. But the final part is still that you must complete your annual tax return, so your end of year sort of finalization. It's had a few different names in Making Tax Digital, but it's effectively the same as a tax return you would have done previously, and it's got the same deadlines involved. So you can fill it in from the April after the tax return all the way through to the end of the following January, which is the actual deadline as it currently is. A slight difference though is that once you're in Making Tax Digital, you must use Making Tax Digital compatible software to do that end of year tax return. You can no longer use HMRC's website and the sort of old system and old approach. You must use extra software in a similar way to the quarterly submissions in order to do the end of year. There can be different bits of software, and I'll talk a bit more about that as well in a moment. But yes, you will need specific software to do that. So I said I'd talk about what digital records are, and that's what I'm going to cover now. Specifically, a digital record. Excuse me just a moment. Sorry about that. Right, so a digital record, specifically in terms of Making Tax Digital, is a transaction level record of everything that happens in your business, your property business specifically we're talking about. But that's income and expenses. So you can't have a list of transactions in a bank statement and just add up all the totals and add up all the lines, should I say, to give you a total. You can't look through a pile of receipts and add them all up on a calculator or on a piece of paper or whatever and just enter totals anymore. You must record each individual transaction as a separate digital record. That could be a line in a spreadsheet for each transaction, or probably more easily, it could be a record in an online system, perhaps taken from open banking transaction feed or something similar. But the specific details depend a little on whether it's income or expense. On the income side, for landlords, that would be rent generally. And for each of those transactions, you must record the date that it occurs, the amount, and what it's connected to within your business. So a property or tenancy that's linked to that income. On the expense side, again, you must record the date and the amount. You must also record a little bit of a description or a note about what it is, and of course the tax category that it belongs to, in order to be able to file it in the correct place. And that's all that digital records are, really. But the key is that it must be on a transaction level, rather than having totals, as a lot of people may have kept previously. So what is a quarterly submission? What do you actually need to provide? So at a core, a quarterly submission is a short version of the property page within the existing self-assessment tax return. So that's the SA 105 page. And each quarter, you will send details for the year to the end of that quarter. So every quarter, you're always sending all of the transactions, or I should say all of the totals from the transactions, starting from the April through to July or the subsequent quarter ends. It is only the totals that actually get sent to HMRC, but it is your responsibility to make sure that you have the digital records behind those for the transactions and that they are reasonably accurate. HMRC have said that they don't necessarily expect the quarterly submissions, the quarterly returns to be perfect, but they do need to be pretty close. And certainly the Q4 one does need to be very, very much correct, because that's sort of the one that feeds through into your final tax return. In PaTMa, you can see an example here of a screenshot, and I'll show you a bit more of it actually in action in the demo a little bit later on. But you can see it just shows you the transactions that are behind the totals, shows you the totals, and the ability to click a button at the bottom to confirm that they are the correct totals to be sending off to HMRC. There are sort of a couple of broad categories of software that you can choose to allow you to actually make these quarterly submissions. One is sort of landlord focused. Of course, this is specifically for landlords affected by this, not so much for sole traders. But for a landlord, you can choose landlord focused software. And typically that would mean that it has language that makes sense to landlords and doesn't just cover finances. It'll help you with your property management as well and staying on top of your other legal responsibilities as a landlord, keeping track of compliance and safety certificates, tenancies and tenant details, communications, maintenance, and sort of other processes that are involved and paperwork that you have to stay on top of as a landlord. And of course, one example of this is PaTMa Property Manager. I will mention some others a bit later on as well when we look at some comparisons, but that's the sort of idea behind taking a landlord-focused software approach. Of course, you don't have to. There are other systems around, and they tend to be on the sort of accounts-focused side of things. So there's an awful lot of options on this side, but they, generally speaking, only record the financial records. They don't include all that extra support for the other parts of being a landlord. Typically, they'll also be a bit limited in their reporting. You won't be able to dig into the information and sort of per tenant or per tenancy, should I say, details in quite the same way as you can in landlord software. This sort of broad category of being accounts focused also includes bridging software, which I think is an approach that a lot of landlords have thought would be an easier way to get into, or way to solve making tax digital. And bridging software, or the idea behind bridging software, is that you can take details in a spreadsheet and upload those to HMRC via the bridging software. Of course, it doesn't avoid the need to maintain the transaction level digital records, so you still have to do that. Bridging software typically will provide you with a template spreadsheet, which you then have to complete all of your transactions in order for it to calculate the totals, to then upload and then send to HMRC. So there is still going to be something a bit different and a bit new to learn there. But it might be a little bit simpler, especially for smaller portfolios. That could still be a sensible approach. Some examples generally in the accounts focused software world: Xero, Free Agent. There are lots and lots of others out there as well, though. A little bit more on the bridging side of things. Some of these points I've already just covered, but I wanted to specifically mention that bridging software is only for the quarterly submissions, and generally speaking, doesn't cover the annual submission at the end of the year. And that means you will still need another bit of software to help you with that. I think I'm going to talk a little bit more about this when we get to the accountants section later on. But one possibility is that an accountant might ask you to fill in spreadsheet templates, and they might actually use bridging software for the in-year element of that, and then also feed those transactions into end-of-year software that the accountant will have already, so they can use that on your behalf. If you as a landlord are wanting to take on both these parts, you don't have an accountant, you're doing this all yourself, then typically using bridging software and then a separate piece of software at the end could well actually end up working out more expensive than if you were to just use a dedicated piece of software that could handle both. I have actually already covered this, so I'm not going to linger here for any longer. But the next thing I do want to cover is that of a demo. And I am going to switch away to showing you PaTMa now and walk through a demo. Hopefully you can see my screen there, looking at my demo account on PaTMa. This is a completely fictitious account. None of the details in here are real or represent anyone in the real world. So there's nothing private or secret in here. And as part of this demo, I am going to connect to the HMRC sort of testing system as well. And again, that's all going to be made up data. So you'll see me log into what looks like an HMRC system, but again, it's just their testing system. It's all made up data. Nothing is real. There's no real people being talked about here. Now, one of the sort of key ways you would enter financial transactions in PaTMa would be through bank feeds, but it's not the only way you can enter financial information into PaTMa. You can record transactions sort of manually within the system, and that can still satisfy the digital record keeping because you're entering information at a transactional level, and you still have all of those links and those sort of pieces of information stored. But for this demo, I am going to use the bank feed because it is the simplest and easiest and quickest way to enter transactions into PaTMa. So you saw that I've just got one bank feed set up on this account, but you can set up multiple bank feeds. So that could be if you have multiple bank accounts that you use for your property business, especially if you've got property that's jointly owned or split with somebody else, maybe you've got separate bank accounts for that. If you've also got property owned in a limited company as well as personally owned ones, obviously not affected by making tax digital, but you can still track all of that in PaTMa as well. And of course, then you would typically have a separate bank account for the limited company as well. The bank feed in PaTMa will typically show unprocessed transactions. So this is what's sort of currently outstanding in my account. I haven't been in here for a couple of months, and there's a few transactions waiting to be dealt with. And you can see that there are a number of things here. I'm going to start at the bottom here. One of the key points in PaTMa is that it can cope with using a bank feed for an account that is not just about property. And a lot of landlords have bank accounts where they mix their property business and their personal transactions. And if that's a case for you, PaTMa's got you covered by providing a little cross here where you can just hide transactions that are of a personal nature. So you can just click to hide that and get that out of the bank feed. And then we've got other bank transactions here where PaTMa has been able to automatically match them with something that it thinks is correct. So for this bottom one, the system is aware of a mortgage and a regular mortgage payment, and it's seen a bank transaction come in that matches the amount and the date for that. So it's suggested a link to the appropriate mortgage. And that's already set up with the appropriate tax categorization and supplier details and the property that it's related to. So assuming it's got the matching correct, you can just click to create that expense and it will be recorded in the system. Now, this next one is rent that's come in. Now, again, the system tries to match based on the amount and date and things to which tenancy it might be, but the system hasn't been able to identify a single tenancy in this case. So it's given us a drop-down list here with the short list it has found, and I can just select from that the appropriate tenancy and say that it's rent payment. So again, we've got another mortgage payment out. Yeah, I'm just going to save that one. We've got rent in again. This time, PaTMa has been able to match what it thinks is a single tenancy for this particular rent payment. And you can see the details of the property and the tenancy here. And we can say, yes, that's correct. We can just record that with one click. Then got another one where we've had a drop down because we're not quite sure which it is. So we choose the right one and enter that. Now we've got what's come up as a gas check here, which is just an expense basically. And we don't have an expense already in the system for this. So there's nothing automatically matched. But what we can do is we can click on it and we can then fill in the details for this expense. So some of the details are obviously there already from the bank transaction, but we can just fill in the other details that we need, choose the appropriate things. And for this document, we could choose to upload the invoice from the supplier at this point. But in this case, what I've done is I've actually sent in that invoice already to PaTMa, and it's already available in my inbox here. So you can see we've got a few documents here that could be chosen and are waiting to be processed. This is the one for the gas check. I'm just going to choose that one and click save. And that, has actually errored. That's slightly concerning. Let me try that again. Nope. Okay, well, this is only the staging system for PaTMa. So I'm sure that's working perfectly in the live system, but unfortunately, for some reason, it's not working today on my demo system. But normally that would just save the expense and store away that invoice document with that expense all at the same time. And you haven't had to upload that document because it's already been emailed in to PaTMa in advance. We can record next few expenses here. And this last one, this next one, I'm going to come back to in a second. I'm just going to record the other expense we've got for the mortgage payment and the other rent receipt. Now, this last one is a bit different. So this is intended to represent a property that was previously being let directly and has now been transferred over to being managed by an agent. And in this case, we've got an amount that doesn't match expected tenancies at all, because it's actually had an agent fee deducted from it. But what we can do is we can split this transaction out, and we can say that it's actually this tenancy with rent amount, and we can add a second rent payment. There's actually two tenancies for the 2 rooms that are currently let in this HMO. And then it still doesn't match at the moment. We've got £1,400. This is £210 too much for the bank transaction. So we've got an expense that we need to add onto this as well, which has actually already been entered into the system. So we can choose that from a list here and say this is for the agent fee that's been deducted. We can just get rid of that blank one where we could have entered the details manually rather than using what's already there. And this is now matched up our income versus our expense to give us the right amount for the bank feed. And we can submit that. And that's stored that away for us as 2 rent receipts against the appropriate tenancies and an expense against the appropriate property for the agent fee. So with all our transactions up to date, let's have a quick look at the actual Making Tax Digital process. So the processing of the bank fee that I've shown you is sort of what you would need to do to keep your digital records up to date. You would do that typically every month, maybe every few weeks or every week on a larger portfolio. You could potentially do it every quarter if you needed to leave it that long, but you just need to do that on a regular basis in order to make sure that your transactions are up to date and current within the system. And then at the end of each quarter, as the requirement to make the quarterly submission comes around, PaTMa will send you an email and alerts and the other ways you can configure in PaTMa to remind you to come to this page and make your Making Tax Digital submission. Prior to actually making that submission on the quarterly or in the quarterly process, you will have had to register with HMRC for Making Tax Digital, and you can do that now. So if you know you're going to be affected from April, I recommend that you do go to HMRC and go through the process of registering with them for Making Tax Digital. And you can say, obviously, that you're not doing it for this tax year, but you're going to be starting from April. There are many thousands of people who have already done this in order to be prepared for April, and HMRC recommend that you do go and do that ahead of time rather than it being sort of a rush at the end. And once you've done that, you can then connect your account to PaTMa. Right now, if you log into the live system, this isn't available, but you can, or should I say, you will be able to from April see this page and actually make this connection. But we're not enabling that until April. Now, at this point, I have to hope that things are going to work nicely for me. This is again using a test account on HMRC's test system. So I'm just going to enter a made up national insurance number and start going through the process of connecting my account to HMRC. So we jump off to HMRC, and it's prompting you to confirm that you want to connect your HMRC account to PaTMa. We can continue this and we can walk through this process. Now again, this is a completely made up set of details. I'm just copying from their developer system. So hopefully that will work for us. It did. And then we just need to give one final confirmation of granting access. And here we are back at PaTMa, and PaTMa has now been connected to the HMRC account. The first sort of step that you need to do within PaTMa after connecting your account to HMRC is to tell PaTMa which properties within the system are actually yours as an individual. PaTMa supports multiple landlords within an account, and that could be multiple individuals, husband and wife, brother and sister, whatever it might be. And it could also be a limited company as well, which obviously wouldn't be relevant. But it can also support landlords across PaTMa accounts. So for example, in this example, Peter Blogs, which is the account I'm logged in as here, has their own portfolio, and that's within their own PaTMa account. That's these properties here. They're fully owned by Peter, and I can say, yes, this is part of my property portfolio, and that's now in the list of details that are going to be included in the Making Tax Digital submission. But Peter also owns another property, half and half, with his sister, Helen. And Helen is the one who actually manages that property. And she's got a separate PaTMa account, and that has the jointly owned property in it, and also her own property portfolio, which is nothing to do with Peter and completely separate. So what Helen has done is she's been able to have a landlord in her account for Peter, and then share just that property with Peter. So now Peter's PaTMa account can see that shared property from Helen. You can't see any of Helen's other properties at all, but can just see the shared one, so that Peter can say that, yes, this landlord in Helen's account is also Peter, or me, as I'm using this software at the moment, to say I need to include that 50% of that property in my tax return as well. So you can click to include that, and you've now got both of those included. And Helen will be the one who keeps those records in PaTMa in the separate account. She puts in the rent, she puts in the expenses, she manages all of those details, and they're just brought in, or 50% of them are just brought in to Peter's tax return. So with those details filled in, we can jump back to the Making Tax Digital tab, and we can see that Peter has a number of outstanding obligations, because obviously we're partway through the year at the moment, for each of the quarters. And you can see, as I mentioned, each submission starts at the beginning of the year and ends later and later in the year, so you've got the whole year covered. And this is the cumulative nature of the quarterly submissions. But the first one we need to submit, we can click to review that. And we can see a breakdown of things to check if we've got the individual amounts and then the totals. So the individual amounts, we've got some descriptions here, and we can see that we've got the 50% of the property coming in from Helen's account, and then we've also got our own properties providing rent as well. We've also got expenses and the various categories and totals for those. It is only the totals that actually get sent to HMRC. The individual transactions and individual amounts within the totals must be kept as part of the digital records requirement, but they don't get sent to HMRC. It is only the totals that get sent to HMRC. And once we've checked them and we're sure they're all right, we can click to submit to HMRC. It takes a few moments to send those off behind the scenes, and there we go. That's now been submitted. You can come back and you can view the details and you can resubmit them if you needed to update anything. Although when you do the next quarter, it will effectively resubmit the first quarter anyway, because it will include the numbers from that. So you could just correct in the next quarter. You will be able to see an estimated tax calculation during the year as well. On the HMRC test system, this produces weird numbers because it's not based on the data that's actually submitted to the test system. It's just always the same numbers back. So I won't show you that at the moment, but it is there, and it is available during the year when you are actually using the live system. So that's all there is really to it. That's making tax digital. That's making a quarterly submission, which you have to do a few more times during the year, and then at the end of the year you have to do a final tax return as well. But the quarterly submissions shouldn't be any more onerous than keeping digital records up to date, which is easily managed through a bank feed, and then sending the totals of those transactions off to HMRC. So I'm going to get back to talking more about making tax digital in a few moments. But while we're looking at PaTMa, I just wanted to mention a couple of other things within PaTMa. So on the finance side of things, we do have some financial reports to give you an idea of how your property portfolio is performing. And you can dig into that a bit more for profit and loss on an individual property basis and on different time horizons as well. Because we cover a lot more than just finance though, there is also a compliance report built in, along with many other reports here as well, that will help you analyze how your property portfolio is actually doing at the moment. Because PaTMa does go a long way beyond just bookkeeping and accounts. We cover all sorts of things, from having built-in rental processes and checklists, including for starting a new tenancy. And that specific sort of checklist includes collecting, sending, and getting e-signature proof for all compliance documents you must provide at the start of a tenancy. You can fully build a tenancy contract as well. You can build an inventory complete with photos and all the details you might expect in an inventory. We also provide automated emails to council tax departments and utility companies to tell them about new tenants, and lots more. And that's just in the new tenancy checklist as well. We also provide rental price comparables to help with pricing and estimating your rents. And of course, that's going to become even more important with the Renters' Rights Act, where you need to be able to demonstrate sort of what the current market rent is, or at least was when you started tenancy. We also have facilities to allow the management of maintenance tasks, complete with handoff to suppliers, and whether you have sort of trusted, repeated suppliers as well. You can even share access and share tenant details directly with them, so that they can book appointments without you being involved, and just record that within the system so that everybody stays aware. Tenants themselves have access to a tenant portal as well, where they can see all of their tenancy details, access their compliance documents, contracts, and everything else, as well as sending messages and reporting maintenance issues too. I mentioned the Renters' Rights Act already, but of course we've got other changes coming in related to that as well. So everything will be updated for the new requirements as you're starting tenancies, and new contracting involved in tenancies, and of course the notification that must be given to all tenants during May as well. We will have that built into the system and ready to send in in as automated a fashion as we can in order to meet that requirement. So that's all for looking at PaTMa and demos of things at the moment. Moving on from the quarterly submissions, which we've just been looking at, to thinking about what happens at the end of the year. As I mentioned already, the end of year software is no longer going to be provided by HMRC. Instead, it will be provided by third-party software, so Making Tax Digital specific software, not necessarily the same software that supports the quarterly submissions though, quarterly updates. It can be the same or it can be different. In the case of PaTMa, we are going to be supporting an end of year return as well as the quarterly updates. The quarterly updates in PaTMa are already there and already fully working for property. However, the end of year stuff we are still working on, and that's going to be ready in a few months' time, way before the first requirement in the or the first deadline, I should say, at the end of January 2028. No, like tax years go too long, but yes, 2028. So that will all be ready. We won't be supporting every available income type, but we will be supporting all of the common ones. So next up, I want to walk through what the process is for the annual return, because there's a lot of confusion between the quarterly updates and the annual return. During the year, you need to make each of your quarterly submissions. And this, if you're a landlord and only a landlord, not a sole trader, this will just be your property figures. So it's just the totals and it's just the figures from the property page, the SA 105 page in the traditional return. So in quarter one, you will send your quarter one submission. Quarter two, you'll send the first 6 months. Quarter three, first 9 months, and then quarter four, you'll send information for the whole year, but just for property still. So it will only be the property figures that you're sending at that point. The quarter four ones will be sort of considered the final ones covering the whole of that year though. And then at the end of the year, when you come to do your annual return, that information that has been sent to HMRC, that will actually be the information that is pulled back from HMRC to feed into the annual return. And this is how it works, that the annual return software could be different from your quarterly update software. Because that information goes via HMRC, the annual return software pulls that back from HMRC, because it's just the totals, it's just that information to go into the end of year return. And then you add in all of the other parts of the annual return. So your other incomes, savings, dividends, PAYE, pension, whatever it might be, other allowances and adjustments and things that might be needed, they all go into that annual return process in order to complete the picture of the annual return before the whole thing is then sent to HMRC again. And that can include corrections and adjustments for the property pages and the property elements of the tax return as well. I mentioned earlier that I would be talking about accountants and how accountants fit into this picture. Of course, an awful lot of landlords do use an accountant, and that's an important part of their sort of structure and processes for completing their tax. And there are a number of ways that accountants can be involved in this process. It could be that you employ your accountant to help you do more of this process, to do the quarterly returns, to do the bookkeeping, to enter the details for you. And that could be as simple as sticking with existing processes where you might send your accountant a box of paper with receipts and things in at the end of each year currently. you would just need to do that every 3 months now. And then your accountant may still process that on a quarterly basis, update everything, do the quarterly submission, and then they will already have the records available in order to feed into the annual return as well, at least from the property point of view. You would, of course, need to give them extra details for other elements of the tax return. Or it could be that you take on more of an active role and work with your accountant. So perhaps you do the bookkeeping and you enter the details on an ongoing basis throughout the year. But then your accountant checks those, gives advice, makes adjustments perhaps if needed for those transactions. And then they perhaps handle the quarterly submissions and the annual return at the end of the year, having checked all of those details and having access to that information. Another approach could be that you take on a little bit more responsibility than that, and not only do you put in the bookkeeping details and fill in the in-year information, you then also make the quarterly submissions to HMRC as well. And it's only at the end of the year that the accountant then gets involved for the annual return. Now, in this particular setup, one concern that I have heard from accountants is that if they are doing the end of year return, they may well need to be able to see the individual transactions. And of course, that information doesn't get sent to HMRC, so they can't retrieve it from HMRC. They can only receive the totals from HMRC. So even if the accountant is only getting involved at the end of the year, they will probably still need to see all of your digital records, all of the information that you've kept during the year. Now, if you're keeping these records in a spreadsheet and you're using a piece of bridging software or some such, then you could potentially send those spreadsheets or that total year spreadsheet to your accountant. If you're using a different platform, so landlord software such as PaTMa, or one of the other accounting systems, then typically you will need to be able to share access to that system with your accountant. And that's certainly something you can do in PaTMa. Accountants in PaTMa can have access to multiple accounts that have been shared to them. They will have a sort of customer dashboard where they can look across all of their customers who are using PaTMa to see their current status and whether they've made their quarterly submissions and things as needed. They can also view individual transactions and potentially correct them if you give them access to do that. And that means that they could help you in the middle scenario, where they're checking transactions and perhaps doing the quarterly submissions for you. They can do that within PaTMa. And in the final scenario, if they're only doing the annual return at the end of the year, they can still have access to all the individual transactions. They can check things, they can go back and they can adjust and fix things if needed. And they can actually repeat the Q4, the final quarter submission as well, in order to fix those figures, those totals that feed into the property page within the tax return. If you didn't want to grant your accountant full access, there is also a full export within PaTMa where you can download all of the transactions across a tax year, again into a spreadsheet, and send those to your accountant. And they could then feed those into their own system and sort of build the picture again. It does mean that in that scenario, any corrections that the accountant makes, you would then have to feed back into PaTMa or accept as being incorrect in PaTMa, which would obviously be a shame. You probably want to keep your records up to date. So the easiest way and the sort of most streamlined approach is probably to share access with your accountant so that they can actually make the corrections on your behalf and make sure everything is up to date and fixed at the end of the tax year. Similarly, if you're using accounting software, this will often have a similar approach where your accountant can be granted access to your account in order to make those adjustments as needed. Now, we've only got a few minutes left, so if you do have any questions, please make sure you put them in the chat, and Kat will collect those, and hopefully I'll have 5 minutes left at the end to cover any questions that have come in. So please do start thinking about those and bringing those in now if you do have anything you want to ask. Just for the last couple of minutes though, I wanted to give you a bit of an idea of some of the options that are out there for landlords. across the different software platforms. Now, there are tens of software options on the HMRC software choices page. In fact, I think it's up to around 30 now, in fact. So there's quite a lot of choice. And the ones I've listed here is just a small sample of those that are actually out there and that I could find sort of marketing and available to end users. So quite a lot of the options are really only for accountants to use. And they're not really available or welcoming to sort of end users. But these ones, as far as I can tell, are. There are a couple of landlord-specific ones on here that are not actually currently approved, but they're in the process of getting approved for Making Tax Digital. I'm sure they'll be ready for April. But landlord-specific ones are in relatively short supply, so I did include those as a quick comparison for pricing. You have got the simpler bridging option on there as well. There was only one that I could really find that was really available to end users. There are a few other bridging options that seem to be marketed very much at accountants, and I think that makes it a bit of a difficult choice if you're not an accountant, if you're just a landlord and you just want to be using these systems directly yourself. But yes, do look at the pricing comparison, do look at those options, do look at the HMRC choices page. When you go there, make sure that you click through from the first page, which lists ones that are pending approval. Click through, fill in the options and the forms for the type of income types that you have, and view the sort of short list that HMRC gives you at the end of that. But remember that you might still need to adjust some of the filters in order to find one that really fits your own situation. At the bottom of this chart, I do have PaTMa Property Manager again in its free form, just to say that the free version of Property Manager allows you to only have one rental unit within it. So that's just one property that is let on a single tenancy. And it also doesn't include the open banking bank feeds, but that doesn't mean you can't keep digital records still. You can still upload all of your transaction information through rent receipts and expenses, invoices, and what have you. It's just streamlined without the bank fees being involved. Okay, so that's it. We've got 6 minutes left for any questions. This final slide is just a quick reminder of the key dates and key information and things to leave you there to think about. But yes, if you've got any questions, please pop them in the chat now, and I will try to answer those.
Hi, Simon. Can you hear me?
Yes, I can.
Okay, thanks. Sorry, the chat box was blocked all this time.
Oh, I'm very sorry about that. It should have been open to everyone. But anyway, please do ask a question now.
I was wondering if you can demonstrate the manual entry for income that is non-bank feed, because I have a rent that pretty much changes every month, the income.
Yep. So if I come back to here, if you had a bank feed, I know you said non-bank feed, but let me just mention bank feed. So if you've got an income here that doesn't match up with a rent payment, you can click on it. Because it would be an income, it would pop up a box allowing you to choose which tenancy that rent amount needs to be attributed to, and that can be a sort of non-standard amount or what have you as needed. However, if you're not working from a bank feed, you can go into a property and into a tenancy, and from the sort of rent page within a tenancy, you can add individual rents as needed. Okay. So you can just click on this, you can just add a single payment, and you can fill in the details to record a rent payment.
Okay, that's good. Thank you.
Okay. Any other questions? We'll put another hand up. Let me just see if we can bring you in. Hang on.
Hello, can you hear me?
Yes, I can.
Oh, good. And so just regarding the software that you need, if you've got one property that has 11 flats within it, 11 tenancies, what software do you need? The 5+ one, or?
Yeah, so if you're using PaTMa, then it would need to be on the paid subscription. If you've got 11 flats, then that's 11 tenancies. So that would be 11 rental units. And on the PaTMa website, if you look on the pricing page for Property Manager, there's a little slider you can move up to 11, and it will tell you the price for that.
Okay, thank you. And that's an annual fee, is it?
So the price on that page is monthly, and it's just in fact, let me show you very quickly. So if we go to the pricing page for Property Manager, and we can then drop this up to 11.
Oh, yeah.
So it would be £24 per month. That includes VAT, and includes all of the property management help and support and things in the software as well.
That's £24 a month complete, not for each rental unit.
Not for each rental unit, no.
Oh,
That's for the whole thing, whole portfolio of 11.
24. Thank you.
Yeah, no problem. Okay. I don't think there is anything else. No more hands up. Nothing more in the chat. My apologies if you haven't been able to access the chat. That was supposed to be enabled for everyone. So I'm very, very sorry if that wasn't available to people and you haven't been able to ask your questions there. If you do have any other questions on Making Tax Digital, or anything related to PaTMa, of course, then you can always send us an email. We're available on support@patma.co.uk, and always happy to answer any queries around Making Tax Digital, or of course PaTMa, or sort of wider landlord software usage as well. Thank you very much for coming along and letting me talk to you for an hour around Making Tax Digital. I hope it's been useful, and I hope you find your sort of introduction to Making Tax Digital and getting started, perhaps in April, as smooth and straightforward as possible. Yes, any problems at all? As I said, drop us an email, support@patma.co.uk. Thank you very much for coming.